called Professor Yang-Soo Park. And at this point in time, I'd like to have a very quick round of applause for Professor Park, who actually, together with the team of Fuse One, has made all of this happen. So, being from Israel and meeting Professor Park, who is a futurist, I was asked by Professor Park if I could actually have a very interesting delegation from Korea come to Israel. Not only to Israel, I'm also involved in Switzerland, in the city of Zug, which is called, some people call it Crypto Valley, one of the most epicenters of crypto and blockchain technology. So we had an amazing delegation that's coming from Korea to Israel. We toured them around Israel. We showed them a lot of companies, specifically in the blockchain. Also in the audience is my very good friend, Mr. Liron Langer, who is going to be talking later and saying a few things. Just a quick hello to Liron. And the delegation has been seeing Israel, and of course we took them to Switzerland. We've met FINMA, we've met various other very interesting blockchain pillars in Switzerland, and it was just amazing and also very, very fun. So I'm going to be talking about blockchain and real use cases in 2019. As you know, it's maybe worthwhile touching base on where it all started. It all started in 2009, where there was this anonymous person called Satoshi Nakamoto who invented Bitcoin. And Bitcoin was a revolutionary invention. It was actually a gift to the world, which was invented by this guy. And it all started with a very simple concept, but a very, very important concept, a revolutionary one, which was a decentralized ledger. And it all sounds very simple, but this decentralized ledger concept created digital trust, which is not very easy to create. However, in the beginning, it was really simple. It was taking what is called a centralized database and decentralizing it. Rather than having one central entity control that database, we have a lot of people who control the database, and the software code itself also regulates and makes sure that there's no forgery, there's no monkey business, and of course, we can trust the system. And of course, using cryptographic technology, we can also make sure that there's a lot of digital security around it, and this was a really revolutionary idea, and that created Bitcoin. In 2015, a person called Vitalik Buterin came up with the idea of Ethereum, and Ethereum was another revolution. It was the second revolution in Bitcoin, or what I like to call blockchain 1.5. And this idea was, rather than just having a decentralized database, why don't we run computer code in a decentralized manner? So we can not only trust the database, we can also trust the code. So that's where Ethereum started, and that's where the whole smart contract concept started. So it was not just about trading Bitcoins, it was also about running code on the cloud, rather than by one person in a decentralized manner. And of course, this created a world of opportunity. It was just a revolutionary idea, and a lot of people were saying, wow, this is going to change the world, which it will. But then, of course, came 2017, and that's where the Wild West started. Because of this revolution and all this hype that was created around it, all these projects, which were called ICOs back at the time, and are still called ICOs, were starting to raise money. And we saw in 2017 a gigantic amount of money which was dropped into ICOs. And so much money was dropped there into projects which were actually not always real truthful projects, and many times it were actually scams. And this Wild West, of course, resulted in what we all know happened in 2018, which was a complete meltdown of the whole world of cryptocurrency. And this meltdown, of course, meant that a lot of people lost money. And of course, when people lose money, they're not happy. But the governments, of course, of those people, we all live in countries, and it's all governed by rules and regulations. The governments were not happy either. They wanted to protect their citizens. So they were starting to say, hey, what are all these ICO projects? Because all these companies were saying, this is just a token, it's a utility, it's not a security, it's not an investment, it's just a token, you're buying a token. It's similar to buying a token to an arcade machine where you can play a game. But is it? And those regulatory committees, of course, in countries started thinking, are they really investment or not? So this brings us back into 1946, where there was a company in the US which was called the Howey Company. And Howey Company was actually based in Florida, and they were selling land to people. They said, we're going to sell you land with orange trees on it, or what is called orange groves. And not only are we going to sell you the land, we're also going to sell you a service contract. So when you buy the land from us, we're going to sell you a service contract where we are going to be growing oranges for you, we're going to sell the oranges for you to other people, and we're going to give you money back. So you're going to make a lot of money from these lands. And that's what was the promise of the Howey Company. But the US Security and Exchange Commission was saying, no, this is actually an investment. This is not just a simple sale of land. But the Howey company, of course, protested. They said, no, it's just selling of land. So that went all the way to the Supreme Court in the US. And that's what basically was the birth of the Howey test. And what is the Howey test? It was basically trying to distinguish between a simple deal or an investment. And the main concept of the Howey test is saying is that if you invest money in something and you expect returns or you expect profits, and these returns come not from your effort, but from the effort of a third-party company or from a centralized company, and it's based on their effort, not on your effort, then it's an investment. And that's called the Howey test. And this is the test that basically the US started looking at ICOs. They were saying, okay, and one of the famous ICOs that they were looking at was called DAO. So that happened in 2017 at the height of the crypto boom. They were looking and they said, hold on DAO, you're not a utility, you're actually a security because you're passing the Howey test, you are a security. And that basically means that you need to be registered at the Security and Exchange Commission just like any other security. We don't care that you're a blockchain project, you're a real security. So you have to register. And then of course all ICOs started getting really afraid because if they need to register at the Security and Exchange Commission, that creates a lot of problems for them. And it also exposes them to penalties and sometimes jail. So they were trying to say, no, we're not a security, and so on and so forth. But then the question is this good or bad? Because in some cases, you really are a security. And it's fine to be a security. And the Security and Exchange Commission of the US actually says, well, you can offer digital types of securities using blockchain technologies, however, you need to be compliant with the regulations. And what are the regulations? And this is going to be a fun slide for you all, so bear with me. It's a very easy slide. But the main idea is that the US Security and Exchange Commission is saying, look, you can offer securities in the form of blockchain projects as long as you follow the rules. And what are the rules? It's either you registered fully as a security at the Security and Exchange Commission, just like an IPO, for example, when a company goes IPO, or you can get a few exemptions. And in the US, there's actually a few exemptions which you can actually follow to be registered as a security token. And what are those, without going into the full details of those, there's a few options and a few paths which you can take. The most popular ones are called Regulation D and Regulation A, and they have to do with how you register and how you make sure that you're compliant with the Security and Exchange Commission. And most of it has to do, of course, with solicitation to accredited investors, which means investors that have a little money to spend. And these are the ways which you can actually offer today security tokens. And of course, this merger between blockchain technology and regulation, both in the US and in other countries, created what is today one of the most popular topics of discussion, which is called the security or asset tokens. And there's actually, typically in the world today, there's two major authorities that are talking about security tokens. So what we call regulatory clarity. One is the Security and Exchange Commission of the United States, and the other one is the Swiss FINMA. FINMA is the Swiss regulation which Jan Suk and the whole group we actually visited in Switzerland. So basically the idea is that there's three types of tokens today out there in the world. One is a security token, which is similar to an investment. It's just like any other investment, but it's of course regulated, and of course it's connected to the blockchain technology. So you can offer security tokens which are legalized and legal in some countries of the world. The other type of tokens that you have today are utility tokens. What is a utility token? That's what most ICOs claim to be, but of course most ICOs are not, because most of them do fall under the category of a security or an investment. A utility token is a token which basically gives you access to some kind of feature in the system. It's similar to buying a coin to play in an arcade machine. You don't expect a profit, you just expect a certain type of service, and that's a utility token. And the third type that FINMA and the Security and Exchange Commission in the US have actually declared is what is called a payment token or a cryptocurrency. A Bitcoin, for example, is a payment token. It's not a security, but it's also not a utility. It doesn't give you any feature. It allows you to pay for something, and that's called a payment token. And in Switzerland, the government body of the Swiss Security and Exchange Commission defined these three, and the same in the US. However, it's not as simple as, okay, the whole world is aligned, because the world is not aligned, okay? The two main jurisdictions, of course, are Switzerland and the US. There's a lot of things happening now in Malta, and there's a convention in Malta soon with a lot of people that I know from here are going to Malta. So that's another country which is introducing clarity, but for many countries, there's still uncertainty. Talking to a lot of Korean people, of course, there's still uncertainty in Korea. And of course, there's still uncertainty in the European Union. In China, it's completely banned. So there's no one single regulatory clarity around the world. So it's still very complex. Now, I'd like to talk about some of the use cases where security tokens can actually help us. One of them, of course, is getting companies public. So today, if we count the amount of companies in the US alone, it's about 32 million companies which are registered in the US. That's a lot of companies. However, if we look at the amount of companies who've gone public, which are traded on stock exchanges, it's only about 4,000 companies, maybe 3,700 companies. It means that a very small amount of companies is actually traded. And sometimes these are amazing companies. These are really good companies that you would want to, as an investor, invest in. However, the problem is that today, if you as a company want to do an IPO or become public, it's extremely expensive, it's very complex, it takes a lot of time, and the chance that you'll do it is very, very small. And that's why the small figures. So what if those companies could actually take their shares and offer it digitally using security tokens? This is one of the examples where we as investors would have access to some amazing opportunities, and investors in those companies, those founders, would finally have the opportunity to offer the companies publicly. And of course, offering equity is not the only thing where you can actually do with security tokens. There's a lot of applications. Yesterday we had a startup competition where Young-Soo, Liron, myself, we've actually heard some pretty amazing cases of companies who are doing a lot of really wonderful things in the world of blockchain. One of the companies that we've heard talk is HanBitGo, which have a booth outside. And what they're doing is they're actually tokenizing fine art. So they're actually offering the opportunity of investing in paintings, in pictures, rather than buying the whole picture. You can buy a piece of the picture. And of course, it's an investment. And that's called an asset-backed token, because it's backed by an asset, a real-world asset. What is that asset? The picture, the painting. Somebody actually owns the painting, and you own a fraction of it. So that's one opportunity. Of course, real estate, that's another opportunity. You can take a house, rather than buying the full house, you can buy maybe just a small piece of the house. The same goes for startups. The same goes for venture funds. You can even invest in a basketball team if you wanted to, if it's fractionalized and tokenized. So there's so many opportunities. And as Brock Pierce is saying, or I quote him, you know, there's billion, trillion, and the next number is, who knows? Quadrillion. So basically, this opens up a world of a quarter of a quadrillion of world assets which can be tokenized. And of course, tokenizing is not the only thing. It's really about the simplicity. It's a lot of advantages that security tokens bring. And what are the key advantages? Well, the key advantages is, for example, rather than buying a full house, you can split it into pieces. So that's called fractional ownership. It's of course traded on a 24/7 basis. Rather than hoping for the stock exchange to open, you can trade anytime you want. There's a lot of liquidity that's potentially there, because you don't have to wait for somebody to buy the building from you. You can just take that small fraction of the building and immediately sell it. That's called liquidity. There's of course a decreased amount of money that's involved, so that lowers the cost and increases efficiency. The whole flexibility of smart contracts, so you can actually make sure that it's completely in line with the security and regulations rules of the specific jurisdiction which it is in. And that is embedded into the code. So there's no need for a third party to actually make sure that there's compliance happening. The code itself makes sure that compliance is happening. So there's so many things. And of course, there's also one very important aspect, which is called the asset interoperability, which means that you can take various types of asset classes. So for example, you can own shares in a company, you can own parts of the picture, a part of a basketball team, and it's all traded on one singular exchange, and you can use this as collateral, you can use this to basically do anything you like. And that's a completely revolutionary idea. So there's 4 typical types of security token types or asset classes. The first one is a tokenized VC fund. Rather than being an LP that invests in a fund a big amount of money, you can actually invest a small amount of money, just hold shares in a tokenized fund. The second type is an asset-backed token. These could be tokens, for example, that represent a piece of gold. Rather than actually physically owning the gold, you actually own a token which represents a piece of gold which is stored somewhere. There's share-like tokens, which is equity tokens, so you actually hold a piece of an equity of the company, or real estate building, or whatever that is. And there's crypto bonds. Basically, it means you expect a certain type of revenue flow down the road. And these are the 4 types of typical security tokens which are out there in the world. Now, we've heard a lot about security tokens, and recently we've heard about STOs. And what is an STO? An STO is a security token offering. And if you recall, in 2017, there was a lot of emails flying in the air about ICO of this company, ICO of that. Nowadays, we see STO. And what's the difference between an STO and an ICO? Well, in an ICO, we all know, because of the bad experience or the bad taste that ICOs have left with us, is that basically it's a company, or sometimes not even a company, which offers you an opportunity to buy tokens in some kind of project which is not regulated. You don't even know if the people behind the projects are real. You don't even know if the project is real. You don't even know if there's fraud committed. You don't know anything. The only thing you know is that you can buy the tokens very easily and you can lose your money very easily. With security tokens and security token offerings, you're actually buying a regulated product. So you know the chance of fraud is relatively low. It does not mean the company will succeed, but at least you know that there is some kind of regulatory clarity. So most likely, it's not a scam. Most likely, it's real people behind the real project. So you're investing in that project and hope for the best. So security tokens basically embody a huge opportunity. It's taking the whole concept of blockchain technology and this revolution that blockchain brought in and connecting real-world financial assets to it and creating something which down the line and starting from this year, pretty much in 2019 and onwards, is going to be a huge and gigantic opportunity in the world. It's kind of taking what was broken with ICOs, fixing them, and creating something which is called security tokens. Now, of course, like every technology, there's something which is called the hype cycle. So it starts with the idea being a really cool idea, people starting to get excited about it, and people saying, wow, this is going to be amazing, and then people investing in that, throwing money into that, and then kind of like, you know, they find out that it's not as good as they thought, and they find out that the promise is bigger than the actual deliverables, and so on and so forth. And the same goes, of course, for security tokens and security token offerings. We're actually just in the early stage. We're in the real beginning of security tokens. And in fact, we are we are pretty much here in the beginning of the enlightenment. So actually we are seeing real use cases that are starting to come. Real good stuff that's coming. And it's going to take another 4, 5, or maybe even 10 years until we see the full potential, but there's revolution really coming. So that's where we are. And of course, there's a lot of challenges. First of all, when we look at security tokens, which are already traded, there's a lack of liquidity. Not a lot of people actually can trade it so quickly as it's supposed to be. There's, of course, the question of education. A lot of people have a bad taste from the days of ICOs. And of course, you need to educate the public to do that. There's an ecosystem which needs to be fully functional for security tokens to be working. There's a regulatory unclarity today. So it's clear in the US, it's clear in Switzerland, it's clear in Malta, but it's definitely not clear in China. Or maybe it's clear, but it's in a negative form of clarity. It's not clear in Korea, it's not clear in the EU, so there's no one uniform regulatory clarity, which of course is a major challenge for STOs. In terms of the ecosystem, so there's obviously, like everything, there's a full ecosystem which supports security tokens. And we're looking at an ecosystem which basically starts from issuance platforms to exchanges. Remember that a security token exchange is not your typical exchange today with cryptocurrency, because security tokens need compliance. For example, if you're selling a security token to only accredited investors, it means that second-hand trading must always be with accredited investors. How do you control that? So the exchange must control that, and so on and so forth. So there needs to be a complete ecosystem for supporting that. And there needs to be liquidity providers, and so on and so forth. And there's, of course, some really good examples of of security tokens which are out there, and some VCs, for example, like Brock's Blockchain Capital, which was the first fractionalized VC to be offered as a security token. There's different types of things happening. And again, as I said, we should be looking now 5 years down the road. That's where really things are going to be picking up. So this kind of concludes the security token part. And as you understand, we are finally starting to see some maturity in the blockchain world. We're seeing a major change, a shift, where the shift is taking this technology of blockchain, but connecting it to real world cases. Whether in 2017 it was really more about hype, it was about speculation, it was about gambling. In 2018 we had this big bang where everything completely collapsed, and in 2019 we see a sort of a renaissance. We see a new type of blockchain. Now we're talking about real world cases. And one of the cases that I'd like to touch upon is another type of asset which has been completely overlooked and needs to see some revolutionizing, and that is, for example, the loyalty program world. So I guess most of you are flying in airlines, staying in hotels, and so on and so forth. Especially in Korea, there's a lot of loyalty programs. How many of you are signed up to a loyalty program? Maybe Korean Airlines, Marriott Rewards, raise your hands. Lots. So, of course, we get points, we get miles, and so on and so forth. The problem is that typically we have nothing to do with those points. We have nothing to do with those miles, because it's either that we have too little or we have nothing that we actually want to do. Maybe we have only 500 miles on Korean Airlines. What can you do with it? Nothing. So you actually typically forget about it. On the other hand, the loyalty programs of companies are an extremely useful and very, very important tool for their marketing, because if you have a really good loyalty program, well, then your customers are more loyal. Your customers are going to talk about you with their friends. They're going to buy more, and they're going to stay customers for a longer period of time. So actually, you want to really invest in those loyalty programs. And it's no surprise that companies are throwing a lot of money into loyalty programs. How much money? Well, roughly every year, about $500 billion US of money is being thrown into points and miles by companies. If you look at all the airlines, all the hotels, all the banks, food chains, and so on and so forth. So what happens is that most of these loyalty programs are not very successful. They're not successful because customers are not active, and most customers eventually abandon the loyalty programs. And most of those points are never used. Actually, more than 50% of the points are never used. And that's not a good thing for those companies, because those companies actually want you to use the points. They give you the points so that you can use it, because it creates better loyalty. So that's where we see a lot of coalitions happening. What is a coalition? It's basically a way to solve the problem of liquidity. You have points in a loyalty program, you can't use it. You have points in the loyalty program, you don't even want to use it because there's nothing interesting for you. So what they've done is they've created coalitions. For example, Marriott and Starwood hotels have actually merged their loyalty programs to create one big program. A lot of airlines have merged together to create another big program. So there's Skylines, there's SkyTeam, and so on and so forth. And this kind of solves the problem. It allows you to do cross-marketing, it allows the customers to earn more, and of course spend more, and so on and so forth. However, coalitions are not that simple. They're actually pretty complex, because if I'm a company and I'm part of a coalition, I need to accept the points and miles of another program. And that creates a risk, because if I'm going to be accepting, if I'm company A, I'm Burger King, for example, and I need to accept the points of maybe a company like Korean Airlines, then I'm exposing myself to a risk. And of course, that's where it leads to a lot of negotiations. What is the value of the point? How much do I actually allow the value of the points of other people to be accepted by me, and so on and so forth. So it's very, very complex, and there's a lot of trust issues. For example, there's a big problem now between Lufthansa and Turkish Airlines, because they have a rift over their loyalty programs. So it creates a lot of difficulties. And this is, of course, where blockchain, as another example, can come to the aid. And we see now a world that's changing, where a lot of companies are actually embracing blockchain technology for their loyalty programs. And what we see is another type of asset. It's a $500 billion a year asset class, which is being tokenized. It's basically done now by Singapore Airlines, it's done by Japanese Air Nippon, it's Air Asia, which is going to the blockchain. It's a lot of companies which are moving their loyalty programs to the blockchain. And basically the idea is that we were talking about asset interoperability before. What if you could have a loyalty program which is running on the blockchain, which you can actually swap the points of one company to the other? So what if I could earn points at Korean Airlines while flying on Korean Airlines, but then use those points at McDonald's, for example, to buy a hamburger? Well, this can all happen because of blockchain technology. And this is where the next revolution, or one of the biggest revolutions in blockchain coming. And as an example, you can see how it could look like. It could be, for example, that you have one wallet where everything is interoperable. All the points, all the miles that you gain can be exchanged one with the other. And that's, of course, a major revolution. So that basically concludes my discussion for today. I just want to show you one small example of how you could use blockchain with loyalty programs. Think about the following example, which is called the Pacer system, where they basically sign an agreement with Nike to give customers points for running. So you can see that Pacer, hopefully this will be, yeah, you can see that lights around the stadium, and Pacer is basically a system which the runners are running after the light, and of course the system follows and tracks the runner, and it gives them the pace for running. And if you run well, and if you run according to the pace, you earn points. And with these points, you can go to the Nike store and buy shoes, or if it's all interoperable, you can of course then maybe even have a meal. So basically all those calories that you burned on running, you can make up for it in a nice burger meal. So by that I conclude my presentation. Thank you very much for